Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we've got a really exciting one for you. We're going to be talking about HIVE Digital Technologies. There's a lot going on with this business, and we're actually joined by the executive chairman and CEO to tell us a little bit more about this company. Now before we get into it, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below if you're currently holding shares of HIVE, what you think about their HPC and AI strategy, and what your price target is for Bitcoin moving into next year's halving event. Now with that being said, let's get into today's interview. Hey guys, so that's right. Today's video, we've got two special guests for you. We've got Aydin Kilic, who's the CEO of HIVE Digital Technologies, along with the chairman and co-founder, Frank Holmes. You guys, thanks so much for being here. Super excited to talk to you today and really appreciate the time.
It's great being with you.
Aydin,
thank you for having us.
Thanks so much, you guys. We'll get right into it. So for people who are maybe unfamiliar with your personal background and the HIVE Digital story, can you give us a little bit of detail in terms of where you come from and how you ended up at HIVE here?
Well, I'm originally from Canada. I've been living in Texas 34 years, so I like to say I'm a Tex-Can. Y'all come back, eh? I'm a fund manager. I have a global investment company called US Global Investors. I write, I publish, I have over 100,000 readers on a weekly basis from 80 countries. And I'm known for the world of gold, which led me down the path of launching the first crypto mining company in the world. And I also known for ETFs, in particular JETS ETF, which is very popular with the Reddit and Twitter crowd, especially during COVID and Robinhood. So it's listed in New York Stock Exchange, it's listed in London and Mexico City and Lima, Peru. And that's how I'm come from Toronto, Huron University at Western.
Great.
And Aydin, he's an electrical engineer.
Yeah, so I started my career doing research into design and exterior wireless. I studied radio frequency. I had a stint in real estate development being in Vancouver. That's where a lot of the money is. And then I founded a company. I was actually inspired by HIVE in 2017. Founded a company, took it public. It was called Fortress Blockchain. It's still running today. It's called Cathedral Bitcoin. Frank and I met on a panel in January 2018, and our travels took us to DC, Bahamas, New York. We became industry friends, and then Frank extended the amazing opportunity to join HIVE as president COO in summer of 2021, and then I was appointed CEO at the beginning of this year. So we've just been growing and optimizing the business. I think that HIVE, pound for pound, is one of the best players in the Bitcoin mining sector. We were one of the world's largest Ethereum miners up until the merge, and we've, of course, pivoted into HPC and AI because we have an armada of NVIDIA data center grade GPUs with tensor cores and all the bells and whistles that you need for AI processing. So it's a super exciting time, which is earmarked by the rebrand to HIVE Digital.
It definitely is an exciting time, and I want to get into a lot of that in today's discussion, the high performance compute, the AI discussion. But before we do, I know HIVE has gone through a big transformation over the last couple of years. Can you give us a quick update on the current operations and kind of a high-level summary of your business as it is today?
You know, when HIVE first went public, and it was the first company, it was also mining Ethereum. And when mining Ethereum, we had to develop an expertise in using GPU chips. At the beginning was AMD, and then it became NVIDIA chips. So the idea of AI and the many applications, it exploded this year. But we were going down this path for over 3 years ago. And we're now fast tracking that process. And I can give you more granularity on it from our beta site. But we have about 38,000 of these high-performing NVIDIA chips, which allow us to use AI to mine smaller coins that are using proof of work. And for your listeners, there's proof of stake and proof of work, and we are only in the proof of work where we earn new coins. And that's been very profitable for us, but nothing like the Ethereum. The Ethereum mining was a consistent high gross margin business. In fact, we made so much money, we were able to go and buy more equipment and build an exahash with ASIC chips mining. So from that end, the granular details of it, I want you to give it, we've used 2% of our chips, and our beta site was a home run.
Yeah, that's a great way to frame it, Frank. So for the listening public, when you think about the mining business, right, we take energy, right, and convert it to hash rate, and that's how we earn the digital asset, whether it's Bitcoin or Ethereum. Now, generally, for the lifetime of Ethereum mining, especially the last 2 years before the merge, ETH was throwing off about 3 to 4 times the amount of revenue that Bitcoin mining did, right? So, and we measure this in dollars per megawatt hour. AI and HPC compute is throwing off 15 times the revenue per kilowatt of Bitcoin mining. So it's about managing energy as a resource and how do we deploy that to build value for our shareholders. And that's how we were able to leapfrog in the Ethereum mining business, buying GPUs, getting a quicker rate of return, and then expand our Bitcoin mining business, right? So it's all about the allocation of capital and how we have with energy. But moreover, the experience required to run a huge fleet of GPUs is a lot more involved in ASIC mining. And so you've got a server, you've got the GPUs, it's an entire system. Whereas when you're mining Bitcoin, it's you've just got this device that you connect thousands of them to networks. So because our team was running one of the world's largest Ethereum mines for so many years, and we were a top performer in that space, we have all that team IQ now to get into the AI business. And we've already been doing $1 million a year of run rate revenue with our GPUs and AI computing. So it's a very exciting. I mean, the way as Frank has framed it in the past, we've effectively completed our beta test for high performance computing using our GPUs, and that revenue actually hit our financials. It came out period end March 31. So now we're gearing up to take it to the next level.
Amazing, exciting stuff. And just a quick question.
So I want to share with you what's exciting in this is that we're really a technology innovation company. And that's a big reason why we changed the name. We took out the word blockchain and more reflect that we're in the digital business. And wherever we can get that high margin. So it's HIVE Digital because it covers the Web3. And in addition to that, it covers HPC. We never expected GPT chat to all of a sudden explode the space, and we can see what that can do. But for us, we're innovators. We're the first to balance the grid. The Riot's been successfully now doing it in the state of Texas, but we've been doing it for more than 3 years. We have the first to take your heat in Montreal and heat a building 5 times the size of our data center, where they're making whirlpools with 170 manufacturing workers. So we like this idea of being innovative. And in northern Sweden, 100 miles south of the Arctic Circle, we're in plans to finish out this concept of 95,000 square foot greenhouse, and they'll take the heat from our data center and heat so that therefore there'll be no carbon footprint of bringing produce from Spain or Italy up to this region. If God forsake there's another COVID type lockdown, they don't have to worry. They'll be self-sufficient in that northern part. And we see the adoptions for this technology and of applying to dry rice. Rice has to get dried. Pulp and paper business, you have to dry the chips of wood. So you can recycle this molecule, and we were the first to go into be green only. So we only source green energy, geothermal and hydro at this stage. We're exploring solar and wind, but they're not as consistent of what we need for building these data centers.
Yeah, I was going to say it's definitely an exciting time. Nobody, I think, expected the AI boom quite to the extent it is, and it's created a lot of opportunities. Now, so obviously you started with Ethereum, very profitable. It was proof of work. Now it's moved over to proof of stake, so you're looking at other coins. How many coins are you guys focused on right now outside of Bitcoin?
It's who's ever the most attractive returns on invested capital. One of the things we've done, and we're running Hive, and Anthony Power has covered this as being the most efficient miner and hash rate index, the Luxor group. They've also covered that we've had the least amount of dilution and we've had the highest cash flow returns on invested capital. So as executive chair, that's the overall, as a money manager of mutual funds and ETFs, Hive was my proxy as a co-founder because I couldn't launch a Bitcoin ETF in 2017. It still hasn't been launched yet in the US. And so when you go and mine, you create a virgin coin or the Genesis coin, and it doesn't have an AML or KYC problem. It's a B2B business model. So it's been a wonderful proxy for us. And the discipline as money managers is the cash flow return on invested capital. And Aydin has done a phenomenal job executing and that sort of basic discipline. So they're the unique differences between us and others, being the true pure green only and reinventing with technology, balancing the grid, and other sort of innovative aspects that Aydin can discuss in more detail, especially our data centers.
Yeah, I think one underlying component to the core business of Bitcoin mining is understanding that there's performance metrics. And, people rush into the space and raise capital, but the number one rule, which ties into the overarching thesis that Frank really succinctly before this, what is your cash flow return on invested capital? So, for example, we announced a bunch of machine purchases in December of last year, and, it'd be maybe 2,000 of these machines, 1,000 of those machines. And we don't do one big giant blanket purchase. We are constantly scouring the market. We're running planar math models, looking at, multivariate simulations to understand how we're going to actually ROI quickest. And so what that means is we've already paid off more, over 50%, about 70% now, actually, the machines that we bought in December, right? And that's a very quick ROI. That's less than a 1 year ROI, because a lot of people and machine offers at that time, they were 18 months ROI, some even longer, right? And so the problem is, if you do not ROI on your investment on these ASIC machines, you will not free cash flow. And that means you're depleting your treasury, and you have to go back to the market and guess what? Dilute in order to have another shot at free cash flowing. And this is why it was so succinctly exhibited that we had not only the lowest dilution, but we also had the lowest G&A, and we've managed to keep a hodl of Bitcoin treasury of 2,000 Bitcoin, right? So there's an art and there's a science to it, but it's all bookended by cash flow return on invested capital, right? And, you can look at the financials of all the crypto miners, and it can be boggling a little bit at first, because we collectively as a group, the Canadian Public Accountancy Board has very, and I'll say draconian, write-down conditions where they make us write down assets. You can't write them back up. So if you bought machines when Bitcoin was 30 or 40 grand and then it dips down to 16,000, the auditors force you to write that down. And so you have all these non-cash charges. You have a lot of depreciation, impairments, etc. And so you see these massive non-cash charges levied on the financial statements. But what you need to do is strip all that stuff back and just look at the cash components of the business, the revenue, right? Which all companies measure the same quantity of coins mined per day times the price of that coin that day. And then your cash operating costs for your data center, which usually is called cost of revenue or cost of goods sold. And this is also simply outlining each issuer's MD&A. And then subtract their corporate SG&A. And so HIVE, we are in Sweden, Iceland, Canada, or even in Switzerland and Bermuda. So five global jurisdictions, and our G&A for the entire pubco was 14 million last year, whereas our peers were mostly 50 million and above, triple what we've got, but they don't have triple necessarily our output and production during that period, right? So with Frank as a money manager, understanding the concept of, well, what's your revenue per employee, right? And ultimately, how much money is the business making? So where we try to be a tech leader, the company isn't a giant science project. We're just funneling money down the drain to build a better mousetrap. We want to build a great mousetrap, but we also want to make money for shareholders.
I just want to add to that what Aydin said, is that not all the crypto mining companies are treated equally in how the auditors pressure what you depreciate and what are non-cash charges. So one of the things is that we have always had the most aggressive depreciation, and it was even more so last year, taking write-downs on buildings, etc. So what we did is we took relative to all of our peers, we said, okay, line them all their revenue, line up all their costs, and what is their cash flow, excluding depreciation, excluding one-time non-cash charges. And we were the most profitable. Cash in, cash out. So we're happy about that, but Mr. Market doesn't really capture that to the degree that you would like. As a money manager, I look for stocks that have that personality, those characteristics. But HIVE will continue to strive to be the most efficient. We won't take big risks by borrowing against equipment, which a lot of people did and got hurt last year. They lent money to Celsius to get a higher yield. They lost their money. We never did any of those things. We never went out with massive dilution to buy a lot of machines that you didn't have the electricity for. Everything we've done has been very sort of thoughtful, and a thoughtful process as we've grown the business. And this year we'll double between now and Christmas our exahash, from starting off at 3 and 3.3, we'll be at 6. And the AI business, it's going to basically go from 400 machines to almost 4,000 machines will be hooked up into the system. And based on performance of what we're making from our beta site, we're talking like 15 million in revenue, but it's like 10 to 12 million dollars of cash flow. It's very inexpensive. It's a high margin business the way mining Ethereum was. So that makes us very excited to be able to take a small amount of electricity and provide this HPC footprint and grow that at the same time, be able to grow our exahash in Bitcoin mining.
Gotcha. Yeah, you bring up a number of interesting points there that I want to touch on. So number one, I think you're exactly right. This is a new industry. It's hard for people to value these companies accurately. Apples to apples comparisons are difficult. You brought up Anthony Powers, who's a top analyst in the space, and he's done a pretty good job of creating some kind of benchmark numbers. And you're right, HIVE is traditionally in the top portion, if not the first. The other thing I wanted to mention there is you say it's difficult, obviously, as executive chairman and CEO to see the company not appreciating, but that's where opportunities exist for retail investors, and that's really what this channel is geared towards. So I think it's great to hear that you guys feel you're in that position. Now, the question I have here before we get into the halving and some of that stuff next year, you've talked a lot about growing your hash rate and about expanding the HPC, the AI opportunity there, some of the margins, the altcoins. As a retail investor or someone from the outside, how should we think about this in terms of kind of your ideal revenue structure? Is it going to be a third, a third, a third? Is it still going to be primarily Bitcoin? Where are you guys targeting in terms of your revenue mix?
What we first had was predominantly Ethereum was the biggest margin business, and then we expanded our Bitcoin operation. It became bigger. And we're going to be driven by the cash flow return on invested capital. So we're going to double our exahash. The issue that can dilute that is the growth in the difficulty rate for the industry, the hashing rate. But the HPC, we don't know where it's going to be. That's because our beta site works. But if you took the 38,000 machines and they were all running based on the beta site test, that would be more than 100 million in revenue, but it would make much more than Bitcoin mining. I mean, it would throw off $80 million of cash flow. If you have $130 million of Bitcoin mining revenue today, you're going to throw off probably more like $30 million of cash flow. Is that correct, Aydin? About 30%?
Yeah, and so that's a great point, Frank, is to highlight the margins of each business, because the reality is Bitcoin mining has its peaks and its troughs, right? And so for your technical fans out there, there's something called hash price, which is the dollars per day you get from the Bitcoin network. And right now that number is about, I don't know, 7 cents for each hash that you contribute. And what that means is, but that can go as high as, 20, 30 cents in a bull market. But those bull markets are usually, a year max, and then you'll kind of enter a 2 to 3 year cooling period. With AI, this is an emergent technology where there's this, massive demand. It's really a moment in time, and it's a great opportunity for key players to, build those relationships with other companies that are trying to improve their business, right? And so we can add value to different ecosystems. I mean, don't get me wrong. Bitcoin is the decentralized energy-backed digital asset, right? It's got a ton of great tech features, and we're very long on Bitcoin. But when you just look at the operating margins as a business, your margins are much thinner. And Frank nailed the ratios. When you're looking at Bitcoin during this market, when is Bitcoin going to go back to 60 grand? Nobody can say for sure. But as you know, the difficulty will climb along with it. So it allows us to have a great hedge where we're utilizing our rack space, our hardware, and our resources to have a high margin business in addition to being a major player in the Bitcoin mining ecosystem.
And it's like a cosine sine wave.
Yeah.
One is going up, one is going down. Back in our trigonometry days. And it's a helpful, stable portion for running the business. And what we do have is we have skilled people, and we have the highest revenue per employee of all the crypto companies. I love that metric because it's always demonstrated in any industry, the best performing stocks have the highest revenue per employee. In the gold business, it's the gold royalty companies like Franco-Nevada and Wheaton Precious. Franco-Nevada has $34 million of revenue per employee. Goldman Sachs is $1 million. Well, HIVE last year was $5 million, pushing $6 million. The year before, we were over like $12 million in revenue per employee. So we're the most efficient when you take a look at how many employees these other shops have compared to what we have. And we try to think of the concept that everyone has to wear many hats. They have to be skilled like Navy SEALs rather than just be linear thinkers and linear business people, or even engineers. They have to have multitask ability and skills. So the big mining conference taking place is Mining Disrupt, which is really about the technical aspects. So we have a big part of the crew that's coming from Europe, that's coming from Quebec, New Brunswick. They're coming down, and it's not in the fancy hotel facility that you would have for Bitcoin Magazine. I mean, these are the mining guys, and their fingernails are dirty, and they've got a wrench in their back pocket like a trucker. It's a fascinating, but they're engineers and they're guys, and they all have working hard mining Bitcoin. They want the most efficient ways, and they've got families to feed, and you hear about these stories about their families. So it's an interesting ecosystem, but we will make sure our team is there because our team goes back and they have to be able to have the highest revenue per employee because they are the most skilled.
That's super interesting, and I wanted to actually ask what's a top metric in your guys' opinion to keep an eye on, and the revenue per head count or per employee is an awesome one, and especially at those kind of numbers. Now I wanted to ask one quick question because you talked briefly about your Bitcoin reserve and your HODL strategy. Should we expect we're seeing a lot of companies now, they're kind of selling Bitcoin each month to fund operational costs. Is that going to be the same strategy you employ, or are you going to look at some of those other revenue opportunities to keep the lights on and then hold on to all the Bitcoin?
We can't here's all of them because we're buying high efficient new equipment. The big concern we have with the halving going to take place is that we will have the most efficient suite of ASIC chips in the facility. So everything that's an older chip or less efficient energy consuming chip, Aydin is kicking them out and replacing them with high performing machines. And so when we have sold some Bitcoin this past quarter, it's all been to buy equipment. Otherwise, the business itself is running cash flow positive. But if you want to fast track the equipment side and buying HPC, then we've had to reluctantly sell some coins to upgrade the suite. Is that right, Aydin, would you say, to characterize it that way?
That's a great summary. And, you know, there's really two methods to generate cash flow or increase your treasury. There's sell your coins, right, which is the revenue that you book. And the other is you issue shares. And so where we've seen and we've studied the market, not a lot of the crypto miners have the sort of capital markets expertise that Frank brings to the table with his decades of experience. And so we have a hybrid strategy where we will issue shares when it's accretive. For example, we did a financing, I think, Frank, it was in 2021 with no discount, right? We ran an ATM and we try to just issue shares on up days. So it's about managing that. And then when you look at the cap table, you see that that's why we have the lowest dilution, right? The other option is some companies just blow out all their coins and they have like no coins and they just are constantly trying to scale the hash rate. But that's kind of it's a slippery slope because as hash rate increases, the amount of Bitcoin you earn with time diminishes. So having a certain quantum of actual Bitcoin, green and clean Bitcoin that you've mined yourself on the balance sheet is important, right? And so I think that hybrid strategy is something that we struck a good balance, but it requires, constant strategizing, evaluating the market, looking at opportunities, seeing where the price of ASICs are relative to, because here's one consideration, from our math models. If you look at the price of ASICs at any given point in time, you would want to look at where's your share price, where's the price of Bitcoin, and you figure out what is the least dilutive way to make a purchase, right? So it's just, you have to think that way. And it's one of the things that we've done as part of our, ongoing tactics to be.
And when we look at our peers, they went and borrowed a lot of money. Like right now, some of them are still impaired because they have 18% cost of capital against their equipment. I just won't do that, and we're more conservative. But we want to hold as many Bitcoins as possible. That's our goal, to be able to expand our facilities, improve our facilities, prepare for the halving, build out our HPC because it's high margin business. It's counter-cyclical to mining Bitcoin. And we also believe the value of our data centers are independent, just like they're decentralized. Bitcoin is decentralized, intangible asset. Gold is a decentralized, tangible asset. Both show up as alternative asset classes. What's interesting is that when you go into that AI space, I will tell you that there's privacy concerns or privy concerns, as the British would like to say. Privacy concerns. Who owns that work that's been done? Is it owned by one of the big companies that are the data center, or is it yours? So for us, that's been important. So we know this from Facebook. Every time you post a photo, it's no longer yours. It's their property.
Yeah, there's going to be a lot of questions like that come up, I think, in the next couple of years in relation to privacy and all the rest. And I think you brought up a great point there that regardless of your hash rate, post-halving next year, it's going to be really difficult to accumulate a big stack in the thousands, tens of thousands of coins. So I definitely like the strategy here, you guys. I like the diversification, the various different revenue streams, the recurring revenue. I think you got a lot of things going. To end off, what is something that viewers should keep an eye on from HIVE? Kind of the next big catalyst, I guess, heading into the halving next year.
Well, I don't think we've even had a chance to talk about our contribution to the ordinal ecosystem, but I would say stay tuned for announcements on that. We're working with some technology partners there. We've discovered that we have over 250 uncommon sats in our wallets because HIVE has been mining for years and years and years. And so I would invite your readers to go look up uncommon and rare Satoshis. I think obviously, as Frank was mentioning, the AI space is red hot right now, and we're doing some beta testing on Hive Cloud to work with customers where we could say, you come to Hive Cloud, we can tell you exactly which GPUs are doing the processing for your AI models. We can train large language models for you. You can have an SLA agreement, own your data, have complete privacy. And we think that is the enterprise grade service that companies will need to really and meaningfully have AI work for them. I mean, ChatGPT is a great tool, right? I have an account, right? I upload math models to ChatGPT, but not my math models. I'm just testing to see what it does, because I don't want to upload my bespoke stuff that I spend, countless hours researching, evolving, up to ChatGPT, because guess what? Then the model has it, right? And OpenAI, read your terms of, who reads all the terms of service, right? They just, scroll down a bunch of paragraphs, click accept, and you're basically saying, okay, you guys own everything now, right? So we see that as an emergent need. But in addition, as Frank mentioned, we've got a near-term goal to scale our HPC computing, which is where we lease the GPUs to a marketplace, and that's getting us the immediate cash flow. So we've actually got two prongs in the AI sector. One is leasing GPUs for short term, and we call that GPU as a service. That's $3 million a year run rate revenue. We're going to get that to 15 million this year. And on top of that, we've got the enterprise cloud business, where we're going to be working directly with clients for Hive Cloud. And there's a link to Hive Cloud on our new website, which is very exciting. And really excited to do some really cool stuff with large language models and really taking it to the next level.
Well, I think it's very good points you bring up, Aydin, the ordinals. We're investing in the Lightning Network. We've invested in a company called Matador Gold, which has been working on the space of the ordinals, where they have a gram of gold with art, and it goes out to investors, just like Bored Apes Yacht Club, but it's always going to have gold to it, and it's always going to have a gram of gold. So we like those ideas, and everything to support the Lightning Network, we believe, just builds out the adoption and the resiliency of the Bitcoin network. There are some hardcore that are anti anything except for mining a Bitcoin. We're not fanatics that way, because we believe that in this bigger digital transformation that's taking place, how Bitcoin's network is going to become more valuable, and the Lightning aspect of it, to be able to, where it can move and process transactions at a rapid, faster rate than Visa, MasterCard. That dream is being done now. And it's interesting talking to people that put up a hedge fund. They raised $30 million, and they're investing in 100 different companies, $300,000 max. 50 are going to be in the Lightning, anyone in the Lightning Network. These young coders, like Ethereum used to have an ecosystem of well-funded coders and developers. Bitcoin only had a handful. Today, with ordinals and with the Lightning Network, you're seeing thousands all of a sudden going into that ecosystem globally. And the fact that you don't know, the hedge fund was saying that you don't know which one's going to be successful, but half of their money is going into anyone in the ordinal space that's an artist, a creative person, like Astro Babes. You can look up Astro Babes. You can see them. What that artist, what they've done. That artist has increased his studio by a factor of 30-fold from what he's been able to create, and I'll be early in ordinals along with the Lightning Network. So stay tuned to us, because we're a technology company, and we're thrilled to be world-class Bitcoin miners. I think we're number one in doubling our exahash over the next 6 months. So we're happy from where our growth plans are.
Definitely. Yeah, it's an exciting time, exciting place to be, and it sounds like Hive's all over it. I feel like we're literally just scratching the surface here, you guys, so we'll have to have you on again. to talk about some of these updates, but a lot to have on your radar, you guys. Thanks so much for watching today. If you're still with us, make sure you hit the like button, subscribe to the channel. We'd love to have you as part of the community. Aydin, Frank, thanks so much for being with us here today. We really appreciate both your time.